So glad you're with us on Retire Well. Brad Johansson with Sean O'Drobanak and Kevin Bucher, Citizen Advisory Group. Gentlemen, it is always a pleasure to be sitting on the set with you guys.
Yes, sir.
Oh, it's a great day today. So before we start the show, if it's okay with you, I just want to say, Murphy, happy birthday, girl. I know it's your birthday today, and I'm going to be there once I'm done doing this. So I'm excited, man. I'm sorry, I got to share it.
Happy birthday, Murphy. How do we give an age?
She's 8. Big 8-year-old.
That's an okay age to give.
That's an okay age. We're dropping ages. Speaking of ages, we're going to talk about something that you're trying to figure out. At what age do I do this? Well, it's not 8 years old, but if we're going into Social Security, your first year may be 62. And then there are choices beyond that. And you're trying to figure out what the strategy is. Well, people talk about maximizing their Social Security. Maybe we should adjust to optimizing, maybe maximizing and optimizing. Sean, take me through the idea of what I should know. If I can take it, do I take it at 62?
Yeah, I think, let's just kind of start with what Social Security looks like. When can I take it? We could take it at 62, right? And if we do that, we're going to get a 30% reduction off of your full retirement age. And I don't want to steal Kevin's thunder because I know this is one of his favorite topics to talk about, right? So I'm going to give a brief overview of, we could take it at 62, we could take it at 63, and most people get their Social Security statement in the mail or they logged in online and they say, that increase from 62 to 60, it's really not all that big. So I think I'm gonna take it. Or, well, if I can wait till 70 or 67, that number's a lot larger, right? So there's a lot of things that are going to go into when should I take it. And I think if we can start this show out and kind of give some general guidance out there is, do not listen to your neighbor or Joe at the coffee shop or whoever you may respect or feel that he's a very smart individual. She may be a very smart individual, but their situation is completely different to yours. And when we make Social Security decisions, they're basically fine. I'll put a little asterisk right there because there's, if you fall within a certain time frame and if we might be able to undo it. For the most part, though, you're making this decision and it's final. So we got to know, how should we? When should we? And then what's the best way to, and I like what you said there, optimize while maximizing our household benefit. And we're going to talk about that today.
Oh, okay. So Kevin, if I want to maximize it, well, the obvious choice is I just wait till the very end, right? 70 is where I can maximize it. So don't I wait till then?
Well, that certainly is with certainty the age that you can maximize your monthly amount. And if that's your goal, then I think that's a pretty simple solution for you, is if you want to get the highest monthly amount, that you would just wait till 70. But that is not really most people's goal that we see. Most people are trying to get the most amount from Social Security over the course of their lifetime. So, this is something that comes up on like my social media feeds, and a lot of advisors weigh in with their opinions on this. And, the thing is, everybody wants to have like an absolute, like, oh no, you should wait till 70, or you should never wait till 70, you should take it when you first can get it. And I would say that is absolutely the wrong way to go about it, because there's no absolutes about this. It has to be, what is the right strategy to maximize your retirement? And that's going to encompass more than just Social Security. It's got to be tailored to your individual circumstances. So it may be right for somebody to wait until age 70. But it may be just as right for somebody else to take their benefits at the age of 62. It all depends on their individual circumstances. So if you've heard somebody that's giving these absolute type of responses to when you should take Social Security, I would run away from that, because it's not taking into account anything that's individualized to all of us, because we all are very unique. We all have very different circumstances. So the right thing for you to do is going to be very specific to you and your circumstances.
I'll let either one of you play with this idea, because the idea used to be we retire at 65. There was kind of a standard. We pretty much are going to retire at 65. Well, the world changes. And a lot of people are saying, I can't wait till 65. On the other end, there may be people, in my family, this is the way this goes. We work until we can't work anymore. Is there a standard idea or a plan? As you said, don't talk to the guy at the water cooler or somebody down the street. Is there a number that 65 means anything anymore, that I'm supposed to retire at that age kind of thing?
When you say 65, one thing jumps off the page to me, right? It's we're Medicare eligible.
Okay.
And if we were to, do anything prior, we're got to figure out what's our health insurance going to be. Am I going to go on my spouse's plan? Do I got to go to the open marketplace? All of those decisions, right? I think that's where 65 really comes in, because it takes one of those areas of your financial plan. It kind of, how to address it, right? And it's pretty straightforward. It depends who comes in the office. There might be someone, a farmer, for an example. He's going to work until he can't work anymore. He's going to have busted up knees. He's not going to be able to see the doctor in 10 years, and he's still going to try to climb up and down that combine.
Just what he does.
Right? On the flip side of that coin, there's someone who comes in at 57. It's like, man, I cannot wait to retire. I want to get this benefit. Give me my Social Security check. Let me start my retire. It's completely all over the place from 62, 65, 70, and these are emotional decisions, right? The farmer has an emotional, I'm going to work as long as I can. The other person says, I just don't like my job and I want to retire. Well, let us bring some math to your plan, right? Not just from your Social Security election, because you got to look at the Social Security from a household perspective in conjunction with, well, what else do I have? Well, do I have a taxable account? Do I have a qualified account? Do I have Roth accounts? We're going to have to figure out, what do the numbers say, right? I mean, to Kevin's point, do you want to maximize it? Sure. Wait till 70 and hope you live long, right? But if I wait till 70 and then on 71 I have a bad day, I didn't really maximize my Social Security benefit.
Meaning, if I can tell you when I'm going to die, you can come up with a perfect plan for me.
Perfect, yeah.
The idea on break even, we hear a bunch, Kevin. What's my break even point? Explain that for me.
Yeah, so basically that's looking at how much are you collecting from Social Security as a household as a whole, so cumulatively. So the break even point, so like if you start your benefit early, you're going to get a lower monthly amount, but you're going to collect more of those lower payments compared to somebody that might wait to an older age. Well, they're getting a higher monthly amount, but they're getting less of those payments. So the break even is, well, where do those two things equal each other? So like, how long do you have to live while collecting that higher benefit to make up for all the missed payments? So the break even, and there's really not a lot of mystery to this, the break even is going to happen somewhere between 79 and 81 years old, no matter when you file, because it was built to be actuarially equivalent, right? So Social Security doesn't really care when you take your benefit, because they've built the benefits to kind of make sense actuarially across all the different lifespans.
It's trying to make something that seems very complicated very simple, which is what Citizen has done. Put together a Social Security guide. Would you like one? We'll send one to you for free. You call 866-630-1675. We'll send one out to you. Even better, you call that number to set up an appointment so that you can come in and say, I'd like you to help me with the math. Can we figure this out? Wouldn't you like somebody who's been doing the strategy and the math and putting it all together for decades? Or would you just like to flip a coin and hope you get it right this one time? Don't you want to retire well? 866-630-1675. We'll give you your complimentary Social Security guide. Got more questions? More answers when we return.
My name is Jeff Bucher, and I am the co-founder of Citizen Advisory Group. Well, I got in the financial services industry after college, and I was, like a lot of people, searching for a career, searching for, something to do. Fell into the financial services industry by God's grace, really, and it gave me a place that I could serve people, have fun with people, and really make a difference in their lives. And from that point, it just kind of took hold, and here I am over 20 years later. So I have a passion for helping people, and I think our firm carries that passion along with them as well. And so every day I think the challenge is, how can we provide better solutions to people? How can we provide better outcomes for people? Because retirement can be a scary time, and there's a lot of risks and there's a lot of unknowns and fears. And And so how can we, our financial advisors, our firm, really put people in a position to live the retirement that they've always dreamt of and hoped for? And I think every day I wake up trying to figure out, how can we do that better? How can we deliver better for people?
So glad you're with us on Retire Well. Brad Johansson with Sean and Kevin, Citizen Advisory Group, as we're talking about Social Security, how to maximize it, how to optimize it. And we're talking about the Social Security guide that you can get from them, but answering some of the questions beforehand. Kevin, I want to ask you, if someone delays benefits to 70, covering expenses in the meantime, I want to wait, I'm going to delay my gratification, can be difficult. How do I strategize for that?
Well, that's a great question. And I think it's the crux of the whole decision. So how do you put together your financial resources alongside Social Security and potential a pension to make sure you're getting the best out of all of those components? So there's pros and cons to waiting to take your Social Security. So I go back to what I said at the beginning. Anyone that's got a hard stance on when you should take Social Security is really doing a disservice, because it's going to be very specific to the individual person. So there is a cost to waiting. So you're going to fill that gap either by continuing to work or drawing from your other retirement resources. So we have to weigh the pros and cons of that decision to see if it makes sense. And sometimes it does, but sometimes it doesn't. And sometimes that decision has more to do with other areas of financial planning than it does actually Social Security. What do I mean by that? Well, it could be part of your tax strategy.
Okay.
Maybe by deferring my Social Security, it gives me a bigger window to do some Roth conversions and move money from tax-deferred status to tax-free status. Or maybe it's about health insurance planning. Maybe I retired early and my Social Security would affect the cost of my health insurance if I elected it. So it's about more than just the Social Security decision, and it certainly can't be a decision that's made in a vacuum without considering all of these areas.
Interesting that you say that, because most of us will make that decision on my own. Okay, I'll go to SSA.gov and look at my number. You married? Yeah, I'm married, but I'm looking at my number. My wife's number is way different than mine. Isn't kind of the key strategizing with me and my wife about how we do this?
Yeah, you nailed it, right? Most people they go to myssa.gov, look at my benefit and say, how do I maximize my benefit? And if you're single, perfect, think that way. If you're married like myself, and we got to look at the household benefit, right? Because yes, it's your benefit, but there are strategies around how we should elect whether my spouse first or mine, and I'll just give you an example. While both of you are living, you're both going to get your benefits. So we're going to look at your household to say, how do we maximize your Social Security benefit to your household, right? And I'm going to go off tangent a little bit here and bring some investments, but if Social Security is giving you $40,000 of benefit a year, okay, I'm going to use the 4% rule, and I'm not here to talk about whether the 4% rule is good, bad, indifferent, et cetera, right? But it's an age-old test that if I'm getting $40,000 a year from an income source, from Social Security, it's like having $1 million in our portfolio. That's $1 million decision. So if my household's getting $40,000, it's equivalent to having $1 million in the bank. Let's have a little bit more thought and strategy around when we elect the spouses or my benefit in conjunction with, and I think Kevin kind of said it here, because it really is going to tie into the taxes you pay while alive, but it's also going to play into the surviving spouse's taxation as well. And we really look at that surviving spouse from a tax perspective to try to make the best decisions to optimize your Social Security statement, your Social Security benefit now.
So if we go to that survivor benefit, that's sometimes the math that's not figured in, that we've got this and this is what our number is until something happens to one of us. What do we need to figure in as far as survivor benefits goes on that, Kev?
Yeah, so we've got to model that. And I think that's one of the more important things that we provide to someone when they come in is we're doing retirement income plans, and they're written retirement income plans. It's not only going to show you what the expected income or cash flow is while you're both living, but we're also going to model what it looks like as a household when the first of you passes. From a Social Security standpoint, if you're both drawing a Social Security, when the first of you passes, the lower Social Security is going to disappear. So there's going to be a loss of income. So again, we have to model that. We have to understand what's your household income look like when the first of you passes, and is the survivor still in a situation where they can financially sustain and meet their lifestyle expenses? And that helps frame the decisions around how should I take my pension? Do we need life insurance? How much should we be withdrawing from our accounts? So again, these decisions can't be made in a vacuum. They've got to be made together in unison with all of the other areas of your financial plan.
You know, you bring up a good point when you were talking about that. We actually had clients, they're clients now, but prospective clients a couple of years ago that they came to us, and the gentleman was 67 and he had a pension, which they elected, and they elected his benefit because it was higher, because between the pension and the Social Security benefit, it got them to their income need. Well, the spouse's Social Security was actually less. So going back to optimizing the household, it actually made sense to elect hers first. And in this particular instance, we ended up calling Social Security and saying, hey, we want to pause. We want to pause this individual Social Security benefit, let it continue to grow, and we're going to turn on the other income source, the other Social Security benefit, because we're only going to get that one. And we know that from 67 to 70, that his benefit was going to grow at an 8% every year. And if you think about investments again, I'm getting a guaranteed 8% return, taking no risk. That's a pretty good incentive there.
Do I need, before we go to break, to talk about how things change for a widow or widower when we're doing the benefits? And that kind of moves us into a tax question as well, doesn't it?
100%. Sean, I think, alluded to this earlier, that it's very typical that as a household, when you go from two people drawing Social Security to one, that your household income is actually going to be lower, but your tax liability on that, when you go from married filing jointly to the single, that your tax liability actually increases. So less income, more tax liability, which is why it's so important that we do planning around Social Security, we do planning around taxes, we do planning around income, and we have to model all of these things together to make sure that we're making the best decision, not just for what feels good today, but what's going to give us the financial stability and security to get through the rest of our lifetimes, both as a couple and as individuals or survivors.
And it's why you probably need a tax guide. Yeah, you also need a Social Security guide, which is what this is, to take you into and through the ideas of how does the math work if from 62 to 70? How does it work for the two of us together? This is yours complimentary, 866-630-1675, to put together a guide for you just to lead you through, because there is complications. The government tries to make a lot of rules, and then they make sub-rules to understand the rules before that. And you probably need to understand it with somebody who's been doing it for decades, because you want to retire well. So 866-630-1675 will get you in touch with them. It's probably more important that you have this in your hands with them, but it's yours free. Let's figure this out together. Make the call. Be right back.
There's no shortage of opinions about annuities. Some people love them, others hate them. But here's what matters. The right annuity in the right situation can solve very specific retirement challenges. Whether it's guaranteed income, market protection, or legacy planning, different annuities are built to serve different purposes. The problem is, too many people own annuities that no longer match their goals, or worse, never did. Some have high fees, others come with outdated features, and too often, people buy them without understanding what they're getting. If you've been holding on to an annuity for years, or if you're not sure exactly what you have or how it works, now is the time to take a second look. Our complimentary annuity review can help you understand what you own, what it's doing for you, and whether something better is available in today's market. Refinance your annuity today and make sure it's working for you, not against you.
Imagine not having to face your retirement with the same old corporate solutions as everyone else. In these economic times, you deserve a fresh perspective that includes a personalized retirement income plan, investment portfolio analysis, and tax map from an independent fiduciary advisor whose focus is on you. Call the number you see here to schedule your complimentary review right now.
So glad you're with us on Retire Well. Brad Johansson with Sean and Kevin, Citizen Advisory Group. It's easy for me to say. It is difficult to get through this whole Social Security thing that we're talking about because it's complicated again because of taxes. So I want to put my tax bill test back up. You can scan the QR code. This gives you an idea of the money that's put away. And I want to put it up because taxes now become significant in the Social Security game. How, Kevin?
Well, so I think this is one of the areas that people are probably have the most confusion. Typical question I get is, well, will my Social Security be taxed? And for some people, they don't pay tax on their Social Security, and some people pay tax on some, and some people pay taxes on up to 85% of their Social Security. So here's the thing. When we retire, we have these resources. So some people have a pension, which is great. Some people have 401k, IRA accounts. Some people have Roth accounts. Some people have Social Security. And I look at, we need to put together a cash flow plan for you to get you what you need. And it's like a recipe. I've got to use a little bit of this and a little bit of that and a little bit of this and blend that all together to be as tax efficient as I possibly can. Yeah. And if we have too much of one of those ingredients, it can really kind of screw up the whole tax thing. So Social Security is one of those tax advantaged income sources we have. So we want to make sure that we're making the right decision about when we take it, how we take it, so that it fits within the tax structure, so that we're getting more tax-free income and keeping the IRS's hands out of that. So again, that decision plays into how much money we have in the tax-deferred accounts, how much money are we going to be pulling from that, and what's our overall tax liability.
And you may not know how much you have. So go to mytaxbilltest.com, find out how much you've put away that Uncle Sam still wants a piece of now and later, and the strategies. When we do strategies, do we have to, even tax-wise, Sean, have to start thinking about survivor benefits and in dealing with all of this as well?
Yeah, you know, I think looking at your Social Security benefit going as a household with what your tax liability is going to be, you got to have, those two kind of have to coincide. And I think one thing we haven't really talked about is the investment plan as well, because when we understand what the incomes look like, where they're coming from with our future taxes in mind, we now know how to actually make good and wise investment decisions. But you know, depending on, nobody knows, you know, you kind of alluded to it earlier. It's like, if I knew the day that we weren't going to be here, and if, let's just say that day was, I'm not going to make it a day past 77, well, we're taking it at 62. We don't have that luxury. We don't know what that is going to be. But when we look at that survivor, right, we really want to protect the survivor with incomes. Yeah. And this is one way that we can maximize the Social Security benefit while maximizing that 15% of tax-free income from Social Security. To Kevin's point, some of it's going to be, it might be tax-free, all of it, half of it, 85% might be tax. We don't know really, because you're putting that Social Security on top of your other sources of income, because it's not about how much income you have, it's about where the sources of income are coming from that allows you to be tax efficient. And they coincide with, I can look at my Social Security benefit and say, hey, here is a strategy alongside your qualified plan, and maybe we go get some of that qualified money out at a lower tax bracket while preserving a larger benefit. Yeah. That might be a strategy. We don't know. The numbers are going to tell us what to do.
We've kind of talked about this before as well. We're guys. We're stupid. So we die earlier. And the ridiculous number that is in America right now is the average age of a widow is 59 years old. And yet there are people who are not taking benefits even beyond that once they hit 60 because they simply don't know about them, Kevin.
Yes, I'm glad you brought that up, because there's a lot of different ways we could take these conversations. But survivors, so whether it's a widow or a widower, still has some real flexibility in how they go about claiming their Social Security. So they are still they are now the only ones that have the option to draw off of a retirement benefit while still deferring that survivor benefit, or vice versa, where they could be drawing a survivor benefit and deferring their own retirement benefit. So why would you do that? Well, you could be putting money in your pocket through this survivor benefit while still earning those delayed retirement credits for delaying your retirement to get a higher amount later. So they're the unique individuals that still have the option to draw now and then draw more later. So I think a lot of people are very unaware of that. They're unaware of the rules with that. So survivors are that pool of people that still have a lot of claiming flexibility.
Kind of what you have done with this, right, guys, is a lot of people don't know about this. This guide contains answers to a bunch of questions that for a lot of us, Sean, we don't even know that we should be asking.
No, I mean, I think we're kind of going of all of the options, from the uniqueness of I can take it if my spouse passed away and we were married for 10 years and I'm unmarried and I'm over 60, you're a unique breed there. But I think there's another component where people just want to retire, and, maybe they don't want to retire because they're not mentally ready to, but they're just tired of their job.
Yeah.
And maybe they're earning $60,000 a year. And we can actually turn on your Social Security benefit, and then we can actually go and work to stay under the earnings test. So you don't have to work at the job that you're at, but maybe you can do like a little hybrid retirement while maximizing your Social Security benefit, making sure you stay under a certain amount of income per month as well. That still gets you to where you are at currently. There's a lot of different things that we can do in the Social Security landscape, but it's going to be unique to the person that picks the phone up and that calls us. And we have the solutions at our firm. We've done this for many years, especially this guy. He's old, I'm young. But you owe it to yourself to pick that phone up. Call us, 866-630-1675. I would love to help you. Kevin would love to help you. Pete would love to help you. Anyone at our firm would love to help you to figure out how can we best optimize Social Security for you.
The guide is yours. It is free. The advice is complimentary as well. But it may just give you one of those. Finally, somebody's there for me. And if you haven't heard any of this before, maybe now's the time to make the call. Grateful for your time that you've spent watching us here. Now let's see you in the office. Put together your plan so you can retire well. See you next time.